Welcome to TradeTheMBI.com. This is John. This report is for the 31st, and we filled in the positive extremes from the gap that took place over here. Not too dramatic from that standpoint, but problematic from our shakeout standpoint because we talked about this. When you move to the zero, dipping back below typically is problematic. At this particular stage, though, uh, shorts pretty much got what they wanted out of it and faded off quite dramatically. We did dip below the 33, but NBA yellow is still holding up above it, so you're still going to have that 76% from a support standpoint. Interesting, we're starting the day with DOC green starting to make a crossover move back above, but you've already tipped over on the red. So this is what I talked about. Is going to get a little sketchier from November start, but interesting how you're able to just wipe out all that move in a single day, and this is what we talked about. You get these breakouts that then fill back in place, and you can see from a Nasdaq standpoint, uh, pretty important to fill back these positive extremes that didn't exist on the S&P. So it clarified that one in a clean way. You can already see, though, that we're gapping back up from it because, again, this was all related to, of course, the Fed. A quarter point here, and not sure about December, blah blah blah, yada yada. But it's late but helpful. We'll see what it does to oil prices and that going forward. You can see that the treasury position evening out quite a bit from all the pre-trade that already had led up to it. And from an oil standpoint, we're still holding, though, at that 38% level here. And, it's at the bottom end of the range. It's not horrible, but it's not conducive to like a spurt in growth or anything like that. And again, as we talked about it, the more and more we're starting to see the discrepancy between general electricity prices versus what the cost of oil, and that bifurcation is, I think, going to be the one that's going to make the biggest difference going forward, um, because that's generally the main cost next to transportation. So, and usually they were tandem, and that deviation is really going to be a problem. So, from a euro standpoint, again, now that the war in Ukraine is looking not so great for the Ukrainians, sort of putting a damper on the idea of Europe building up their arms race and jumping into it because it could be over before they even get what they need situated to start anything. And so that's a negative from a euro standpoint because it's not going to create the wartime, spending and growth that they look for. From a gold standpoint, it was a nice pop up from there because, again, nobody's changing their spending habits. They're just lowering the interest rate, so they think they have more money. Nice conversion. Bitcoin not doing exactly as we expected. MBI white lead there, magenta fading underneath. We expected to move towards the 0%. Didn't reach there completely. So it's actually a little bit of a net positive. Did fill in everything that was from the solid portion. You had the tail here of that brief dip that took place from the whole crypto carnage situation. But by testing a low or maybe a higher low, potentially you can end up with a divergence from there. We'll be watching where that shakeout goes because it needs to move up before reaching those ultimate negative numbers right there. That was what, a negative 13.9, something like that. From an ETH standpoint, likewise, it already had filled to the zero, so that met the expectation of the MBI white spike. That was pretty clean, and you can see it's already made a lower shakeout reading. So the potential for that to break lows exists. Something to be aware of. So from that standpoint, you look right here, and pretty darn close to complete fill of that gap. Um, that was pretty clean. Early MBI white spike that took place right back here before the end of the day yesterday, and magenta was still leading on it, but as soon as magenta faded over and then dropped below the 25, it was lights out. And sure enough, as we continued to break, once the 50 was gone, it crossed over. And then you had the MBI white here above magenta and still fading below, and so that was your move to the 0%. From there, you ended up with a little back and forth because you had MBI white moving along with magenta. Normally, that's a little bit of a short cover scenario as it takes place. All happened within one bar, though. It was pretty darn fast. and went back and forth across through there. But each time the NBI White spiked and you ended up with your pivot below the 25, that's more weakness. And once it finally took the lead, the spike here all the way up to the 25, 33 level up here, that's when you expected another move to the zero. And sure enough, we got to that move in the zero. And now you're in that short cover rally where you got extended deep blue crosses over the gray, and then you had the magenta over, and shorts while rising just forced cover into it. So they got too excited, too much, and couldn't do it. Get you right back up to the 50%. Depending on who pivots first here is going to determine the winner on that one, but looks like 50% can break and hold above it. Other than there's no harm, no foul. Interesting that they decided to do it right at the end of the month. I expected that we would see more of this come November, but certainly that was a continuation of the volatility we expected for this month completely. So all of that worked out well. I think that starts to die off as we get into November, but it's still to come. Early morning, you can see we had the early dip was bought back up, but then obviously the option book they needed to do some things, and sure enough they started it by killing the gamma on the longs, and then when puts got in there they wiped them out with the tip back to the upside, and that's going to make them happy and nobody's upset by it. European session again choppy because Europeans really just don't know what direction to go in, and it's still relative. It just depends on your time frame, and this is where it gets different for people. You start to look at the second quarter or so of next year, and things look fairly positive from the investment, and this was just that awkward period that we had talked about for some time, and it's sort of just working out day by day is kind of what we expected. There wasn't much you could do about it, but the fact the government is still shut down, and now you're getting into the really interesting political ones because payments of things are stopping, and that's going to create some more turmoil. So we'll see who feels the brunt of it. Hasn't impacted Trump's numbers or the Republicans, for that matter, have been fairly strong on it. So it's all a question of how people perceive the narrative on it, and we can already see that divide. Though independents have been quite supportive of the idea of not wasting money. I don't know that it matters because if they get the savings, they tend to spend it on something else. So it's no net help, but it'll be interesting to see what the actual numbers from deficit and stuff come in at with this length of the shutdown, because you almost did a month, so theoretically you could have saved some. As always, new indicators will be coming out, and be ready for that over the weekend so that you'll be all set for the start of November. Anything relevant, I will put it on our team chat. Have a good one. Trade well.